InstaLend is your private lending partner, where you can get a loan commitment the same day and close within days. Grow your real estate portfolio with InstaLend. Tell us about your project. We lend on all product types, from short-term, fix and flip, and 30-year rental loans across single and multifamily properties. We also lend on ground-up construction and work with first-time and experienced operators. Our loan products are also available for foreign national investors. InstaLend, your preferred partner for an insta-good experience. For more information, visit instalend.com.
Welcome to the Unlocking Wealth podcast. Thanks for joining us. We will motivate and inspire you as we share strategies from successful and wealthy individuals. Here is your host, David Ordonez, an entrepreneur and real estate investor.
Welcome to another episode of Unlocking Wealth podcast, and I'm excited, thrilled to have Bronson today with me. What's up, man? How you doing?
I'm good, David. It's really good to be with you. I love talking about unlocking wealth and helping people get to the next step financially. So really looking forward to the time here.
No, thank you, man. I appreciate it. Well, Bronson, is a managing member of Bronson Equity, partner in 1,400 multifamily units worth over $120 million. Bronson has raised over $20 million for real estate deals, and he's the author of the single best investment strategy during or after a pandemic. That's pretty cool, man. So tell me a little bit about your story, Bronson. How did you start? How did you came across real estate and then multifamily, now real estate syndications, larger, deals? Tell us a little bit about you.
Yeah. So my background is in medical sales or medical consulting. So I was a well-paid consultant making great money, high six-figure income. And I just realized that, you'd sell a bunch of stuff. And, again, I was working in surgery with different physicians, but I'd have a great quarter, sell a lot of stuff. They'd kind of give you a slap on the back, say, great job, and go out there and do it again next quarter. It's just this constant, it still felt like a rat race, right? I'm making good money, but it just doesn't feel like, I'm like, I have so many other things I want to do. I want to travel. I want to write a book. I want to do all these other things. I have many hobbies and things I enjoy. And I just felt like I was having to work to help make this happen. And I became an accidental landlord, and I had a house in another state. So I had a house in the state of Montana. I started kind of basically saying, okay, my road to financial freedom means I'm going to buy single family houses. And I had a portfolio of 4 or 5 houses. I have a cousin who was kind of a chance meeting at a family event. Hadn't seen him since I was a kid, really. And he's a successful multifamily guy and high net worth, been doing it for 25 years. And he says, well, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. He said, you can raise the money. And so he said, read this book, go to this conference, listen to this podcast.
What book was it?
So there's a book about multifamily called The Perfect Investment, which is a great book, just in understanding how multifamily syndication works. And so when he said, you can raise the money, I just really didn't know that you could do that. I thought it was for somebody else. And so, fast forward now, I've been able to leave my great corporate job. I've, 15x my net worth. I've raised 20 million. I'm doing really what I love doing, which is really helping people to experience financial freedom through passive real estate investing with all the tax benefits and great returns you get from that.
Correct. Yeah, that's great. So you live in California. You're originally from California?
I'm originally from Seattle, but I've been in Southern Cal since college. I've considered moving. I mean, a lot of times it's a tough place to live right now with all the COVID restrictions. It gets kind of ridiculous, but I do travel a lot. I went to Texas 9 times last year, several times to Florida. We buy a lot in Florida and Georgia.
Assume most of all of your projects investments are not in California.
Yeah, I don't own anything in California. Even the house I live in, I don't even own, because I just see things being so much better being in a place where you see population growth, job growth, income growth, landlord friendly and business friendly, which is why we buy basically Texas to Florida. And we're just seeing phenomenal growth in these areas. So I just love being a part of it. And yet I see buying $1 million house that's a small 3-bedroom. It just doesn't make sense, because I can get much higher returns without the risk of things crashing. buying in these other southern markets.
Yeah, yeah. So, I do real estate investing as well, and obviously, I don't. I invest mainly in the Midwest. Same thing in the South, and a lot of people usually ask me, right? And they're afraid of investing. Number one, and number two, especially when it's remote. I mean, like going to another state or having properties in, Florida or the Midwest. What is the key to be able to be successful as a remote investor, right? I mean, what is working for you?
Yeah, so I think with whether you're doing single family or multifamily, your team is really important. But a lot of people think that if you're going to do real estate, that you've got to be doing everything. And so if you're flipping houses, it's got to be you, or it's got to be you're local and you're doing everything. But I guess when you're buying stuff across the country, you've got to have a great team in place. So I've got other partners that I work with. My partner right now has over 13,000 units and has 25 years of asset management experience. So people say, well, how do I get started? Well, it's like, well, you got to find a partner that has the areas of strength that you don't. So if you haven't managed multifamily properties for years, it might be good to find somebody and partner with them because they have that. But for me, I had my skill set of being able to work with people. I'm a people person. I love being able to talk with people. And what I found is, even though my background is sales, really good salespeople, they don't really sell you, right? They're not salesy. They don't come across like a used car guy. Hey, you look great in this nice 1972 Buick, like Fast Eddie down here, right? Like nobody wants that. But what people want is, if they have a problem, to try to help them solve their problem. They may not know they have a problem, but if people are listening and they're paying 30, 40, 50% taxes, there's a way you could reduce that even potentially to zero by investing or setting yourself up or your spouse up as a real estate professional. There's different ways you can do that to where you actually can help solve that problem. So I think the biggest thing, I've really tried to do after having 1,200 individual one-on-one phone calls with high net worth investors, average net worth of 2 million or higher, is just that it's similar problems. Everybody has problems where they're high net worth is trying to reduce taxes, they're trying to get good returns, they don't want the volatility of the stock market, and they want to try to find a way to leverage their time and grow their investment portfolio without having to manage it themselves. And so that's what we offer, and that's what multifamily syndication is about in general. Is basically, you as an investor, you vet the team and you vet the deal, and then you invest, and then you get that mailbox money, right? So that's kind of how the process really works, and that's really what we've been successful helping people do.
Yeah, well, that's great. That's a great model. Now, so when you decide to leave the pharmaceutical business, right? I mean, you read that book and you have a few single family, and how do you make that jump? I mean, where's your mindset at that moment?
Yeah. So there's a saying, some people say you should just, burn the boats immediately. Some people, they get on a podcast or they learn about something. Oh, I'm just going to quit my job and go do real estate. And they, they don't have money and they take out a loan to go do a coaching program. And some of those people make it, they do well. And other people wait till they're like, a few months short of retirement. And then they retire. I've got passive income retiring. So I'm kind of between the two, right? So I had this great job. I was making over $200K a year, working probably 25 to 30 hours a week. And I was hustling because I had that. And then I was working, 30, 40 hours on my real estate business. And so I was doing both. I was really trying to do both. And that's the challenge with a side hustle, is that you're hustling, right? You're doing both. But I knew at some point I would be able to step away. And I wasn't quite sure when to do it, because my family, a lot of education, my dad's a teacher, my mom's a teacher, my grandmother was, my sister, my uncle, just so many teachers. And as you know, if you've read the book, Rich Dad, Poor Dad, it's like education is like the opposite of being an entrepreneur. So then I got in an entrepreneurs group who everybody's, has a business of a certain size. And they were like, without exception, like, yeah, you pretty much should leave your job as soon as possible and just go after it. It could fail, but you'll never know unless you tried. And there's a saying, I think it's by Mark Twain, but it says, at the end of your life, you'll regret more the things that you didn't do rather than the things that you did, right? So it's the idea that don't regret what you didn't actually go after. You didn't actually try. You didn't, go for the job you wanted. You didn't, try to start your own business. You didn't ask the pretty girl out, whatever the thing is, right? Just being willing to do it. And I haven't had a single moment where I've said, man, I just really wish I was back at that job again. It's been amazing. I don't know. It's been kind of magical. So it's going well.
No, and it's great. That's what I love, to have people from different backgrounds, right? Because, I've interviewed people that out of necessity, right? They were pushed to do that business or to start investing, and they were push in that way because out of necessity. In your case, you have a very good job, but it's not fulfilling you, but you're still willing to leave it to pursue that other dream. So, that's what is amazing. There's really not a road to it, right? I mean,
Right.
they don't have to come from the same background, or it's just it's that fire in you to pursue what you really want to do.
Yeah.
That's pretty cool. Now, so tell me about your first multifamily deal. So how did it happen?
Yeah. Yeah. Well, it's interesting. I've done a number of things where, you have to have experience in the whatever the thing is before people actually give you a shot to do it, right? So for example, I was in medical device sales. So I was selling to surgeons in the operating room. Well, they only want to hire people that have experience selling medical devices. And how do you do that if you don't have experience? So it's the same with multifamilies. People that, how are people going to invest in my deals when I've never done a deal, right? And that's challenging. When I first started, I was going to, raise all this money and do all this stuff. And I had 62 phone calls and in-person meetings with friends and family, and zero invested. There was not one that actually invested. But the first guy that invested it with me, I had started a meetup. So meetups are a great way if you're getting started in real estate, just to start gathering people. And even though you're not an expert on the matter, people see you as a leader in that, and it builds trust. So meetups, even if it's a small meetup, this particular one, I partnered with a local person in town who had a meetup, and I said, hey, let's do a second meetup. I'll do all the work, and it'll be a multifamily only meetup. And I promoted it a lot. And at the first meeting, we had 60 people show up, and guy had never met before. He said, oh, hey, I'd invest in one of your deals. And I was thinking, like, I don't have any deals. He's like, okay, great. So I got coffee with him, and I showed him a sample deal, right? I created just my made up deal. I said, this is not a real deal, but this is what a deal would look like. Would this be of interest to you? And he said, yeah, I'd invest like 100K into that. I said, okay, great. So then I also met another guy at that same meeting who was a syndicator who had a deal, who's raising money. And I said, hey, I want to introduce you to this guy. And so I basically introduced him, and that was my first 100K that I raised for a deal. And so it sounds like a small thing, but it's always, the first one's always the hardest. I mean, it's
Yes.
called, I have a friend that calls it the law of the first deal. You get the first deal, and then just things get easier because now you're a player. Now you're not just a tire kicker. You actually are a general partner on a deal. So that was how I got started.
That's great. And what was the first property that you guys acquired?
Yeah, so I'd been doing single family, and this one was a 225 unit property in Amarillo, Texas. It was around a $10 million deal. We just actually sold it a little while ago at about a 26% annualized returns. That worked out pretty well. I mean, there were some bumps along the way, but we ended up, the returns were good. And but yeah, people say, "Oh my gosh, how in the world could you do a 225 unit?" It's like, well, I couldn't, but I had partners that were experienced, and I
Correct.
basically brought what I had, which was some money or somebody else's money, to a deal, and everybody was, it worked out, which was great.
Great. Now, for some of our listeners might not know exactly what a syndication deal is. So, would you explain exactly how the syndication model works, Bronson?
Yeah, the first time I heard syndication, I was like, "What is this? Like some sort of drug syndicate thing?" You hear the word, it's like, what does that even mean? But the word syndication, really, what it means is it's a legal structure that you have general partners and limited partners. So you say, "Okay, I've got this deal. I'm raising, $5 million to buy this $10 million property." So of the $5 million, that's most of the money is brought by the limited partners, which are the investors. And the general partners, which are myself and my partners, we actually operate the deal. So the limited partners can be actually passive. Like I said, it's not fully passive because you still have to vet the deal and you've got to vet the sponsor. But once you're in it, it's passive. And then there's usually an equity split, meaning the profits are shared. Sometimes, one example is an 80-20, so 80% to the limited partners, the investors, and 20% to the general partners, or it could be 70-30. So there's some sort of split there. And what it does is it aligns the interests together so that, the general partners, usually they're invested as well. Like I invest in all of my own deals to what level I can pretty significantly. And then, getting that alignment, that's something that really doesn't exist in Wall Street, right? Because the Wall Street guy who's managing millions or billions of dollars typically doesn't have any of his own money in there, right? So we not only have our own money in, but also we're actually paid based on performance, which is really great. So
Yes.
that's kind of how syndication works. We usually hold these properties for 3 to 6 years, and then we sell them. And again, there's just the profit split there. So that's how syndication works.
Exactly. Yeah, and it's crazy how many investors and high net worth individuals are out there looking for alternative investing, right? And that's a great way to start, raising money because they are looking for that alternative. and you become a great alternative, especially in the multifamily space.
Yeah, yeah, it's really, I mean, Wall Street, and I used to be an investment advisor in the past, and it's been challenging because I look at and I just see, so many people are in stocks and bonds, which people say these are traditional investments, but if you can lose 50% of the value within 12 to 18 months, which has happened multiple times over history, and these are really paper assets versus owning something real. When you look at where the money is, Wall Street spends billions of dollars to educate us that these are traditional investments. But when you actually own a real asset, it doesn't matter. It doesn't fluctuate as much. I mean, you look at apartment valuations and apartment profits and all of this. It basically keeps pace with inflation. So everybody's wondering, how do I preserve myself from against inflation? I don't think stocks are the answer. Bonds are definitely not the answer, because bonds, if interest rates rise, the current bonds that you hold are worth a lot less, right? You have a 2 or 3 or 4% bond, and all of a sudden 8% bonds are out there. The bonds you hold are worth much less. So I just love having the alternative of owning, real estate, particularly income real estate, commercial, multifamily, these type of things. And if you look at people that are very wealthy, many people do work in this area, because it's really unfair. I mean, you get consistent returns, you have less downside, and you just pay little or no taxes. It's really, or you defer taxes. It's really amazing.
Yeah, no, I agree. Now, from a single family, you're doing the big change to multifamily, and then you start experiencing all the benefits that multifamily brings to an investor, right? Just to name a few, tell me some of the greatest advantages that you find on the multifamily space. I mean, you already touched on those, but kind of a little more specific.
Yeah. So I'll mention there's a few of them. So the first one is you're going to get much higher returns than you get in the stock market. There's one thing that we do, and a lot of groups do. We're not the only one that does this. A lot of groups that do this, but it's called a value add component. So you think of, we come into an apartment complex that, let's say it's 100, 150 units, and we'll see that, hey, if we do renovations on these units, maybe we spend $10,000 per unit in Jacksonville, Florida, where we're doing deals, consistently. We can see the rents rise by $200 a month or more. And when you do that, it's all based on how much income this property produces is what
Correct.
the value is. So by doing that, it's much different than buying a REIT, or it's much different than buying some sort of just general investment, or even like a brand new Class A type of apartment, because there's no value to add there. You basically own the market. The market goes up, it goes up, it goes down, it goes down. When you do this component called value, it gives you a margin of safety. And the returns typically go much higher. So you almost double the returns just by doing that particular component in there. So it's higher returns, lower risk. I mean, I could get into stats, but there's at the worst point in the Great Recession, single family delinquency rate, which was people that were behind on their payments by 60 days. It was about 4%, so 1 in 25 homes nationally. At the same point, for large multifamily, it was 1 out of every 250. So it's a much safer investment. Like I mentioned, there's a lot we get into about tax benefits, but another thing is the inflation hedge. They're printing so much money. There's been about 40% of all of the currency that exists right now was created in the last 2 years, David. It's crazy.
Yeah, it's crazy.
So the idea is, like, if you look at a chart, rents and inflation, they're almost lockstep. There's a little bit lagging. Rents lag a little bit, but they generally start rising with inflation. And we're seeing that all over the country.
Oh,
And
yeah.
that's only going to continue, because they just keep, they asked President Biden, they said, what's your solution to the inflation thing? He said, well, you need to pass my Build Back Better, where we spend $2.2 trillion more dollars. Well, that's not a solution to inflation, right? Like it's
more
and it's hard
money.
to understand some of this. But if you own assets such as income real estate, you will be protected from that, because
Yep.
over time, assets will rise with inflation.
Yeah. And you destruct debt.
Yeah.
Right. I
Yeah.
mean, that's
Yeah, my-
that's the beauty of it. I mean, we borrow money right now at very low interest rates. Inflation is high, and we buy in an asset that is going to appreciate over time. So it's like there's no way to lose.
Yeah.
It's
Now,
like-
my friend, you mentioned that's a great point. My friend Jason Hartman says this. He calls it inflation-induced debt destruction.
Yes.
And it's the idea that, like, just what you said, borrow at 3%, inflation 7 to 15%. We don't know exactly what it is, but it's higher. And so not only do you know the value is going to rise, but the debt will be worth less in the future, because you're paying out with future dollars that are worth less. So it's kind of a double positive. It's amazing.
It's amazing. It's amazing. And when you understand that, it's like an eye-opening thing, right? It's like, wow, I mean, I'm really in this space. And the other thing that I love about multifamily, as you mentioned also, is you kind of control, especially with the value add component, is that you control your own destiny in a way in terms of the valuation of that building, right? When you do your due diligence, when you buy single family, you're kind of the mercy of the market, that the comps in the market, and it's harder to control the appreciation of that property. When it's in multifamily, if you increase the NOI and you become very creative, right? I mean, I don't know, you bring a operator for a daycare facility in your apartment building. I mean, you can become very creative in ways of increasing income on that property. And the moment you increase that income, obviously, you're increasing the value of the property.
Yeah, yeah, it really is a creative process because you can go in, you can maybe you're not charging for assigned parking, you can charge for that. And again, it may be $25 a month, but if you do that in, 20 different parking spots, and then that it's a multiple of how much that increases the value of the property. So just by doing that around your property, you could literally increase the value of your property by 50 or $100,000 just by making these little subtle changes. So people don't realize that there's just a lot of opportunity, and a lot of these buildings that are older or it's mom and pop ownership. You come in, we have a deal that we've recently purchased where it's, just a mom and pop owner, and rents are way under market because they didn't really bring them up to market. Now in California, where I live, I know you're in Vegas, you're in the Nevada, right? But California, they have statewide rent control. Well, in Florida, in Texas, and Georgia, you can do this. You can come in and say, we're under market rent. We're going to raise rents, or we're going to do renovations, and you're able to do what you want with your properties. That's also a real positive thing about being in areas that are more landlord friendly.
Yes, no, I agree, and that goes back to investing remotely. So if it doesn't make sense where you are because of these regulations, rent control,
Yeah.
go and seek these other markets. What are some of the hottest markets that you've seen right now out there?
Yeah, my friend Robert Helms, he says this. He says, "Live where you want to, and invest where the numbers make sense." Right. So you can invest, anywhere you want. It's just the numbers have to make sense. We've really focused a lot. We have a large property in Little Rock, Arkansas, Huntsville, Alabama. We've got a couple in Atlanta. Atlanta is a market we love. It's growing. We're projecting around 30 to 35% in population over the next 8 years,
Well,
so by 2030, which is crazy, especially it's still a pretty good sized place. Jacksonville, Florida, I love for a lot of reasons because people are tired of COVID. They like warmer weather. You can still buy a decent house there for $300,000. So for every retiree that moves from New York or Chicago or wherever, they come down there. They need people to, provide healthcare services, to clean the house, to do, car services, retail, restaurants, all this stuff. So this particular area, we're finding a lot of great deals there. We have some good deal flow, but because it's not a primary market, which is just a very large market like Orlando or Miami,
Miami.
we're seeing just a lot. It's still off the radar of a lot of bigger kind of REITs or other groups that are too big. If you have $1 billion to invest, Jacksonville is too small of a market, right? You're going to change the whole area versus you can go with $1 billion into Miami and you can spend it pretty easily. It's a big market, so we like these kind of secondary type of markets as well.
Yeah. Now, so you meet with you meet with investors. You've created your group. You've met partners, general partners. You put teams together in the different markets where you go. Now, how do you get the deals? What's the best way to get deals?
Yeah, well, you can, you can door knock, you can send out mailers, you can do all kinds of things. A couple ways we do it is, once you own a property somewhere, the deals really come to you. And there's a couple of reasons for that. It's because if the broker has had a good experience working with you, meaning you haven't tried to retrade the deal, which means you try to renegotiate it after you've already got under contract. You do what you say you're going to do. You close when you say you're going to close. A lot of these commercial brokers, they want to work with groups they know we're actually going to be able to bring deal. They're going to be able to bring the money and close the deal because that's how they get paid. They don't want to bring it to anybody. A lot of these deals go off market. Something like 80% of large multifamily deals don't even make it to market, which is like, well, why is that the case? And the reason why is because a new property comes in, they know the owner, they want to sell this. They'll make a couple phone calls. Hey, you want to buy this? And they're looking more, and even a lot of the sellers looking for more of a sure thing of who can actually get this done, who can get across the finish line. Because they don't want to work with somebody for 2, 3, 4, 5 months and then have them not be able to close it, right? That's tough for everybody.
Yeah.
So networking with brokers is great. When you start owning stuff in a certain market, you get to have an insider advantage where deals come to you. There's synergies there. Sometimes, we will be at the table with 20 other groups making offers, but that's not the preferable way. We just recently got one under contract in Jacksonville. And it was just, we were literally only one at the table because it was just the seller. We had a relationship with the seller and the broker, and that's how we got it. Right. So again, it's an unfair game, but if you're an insider, you get the deals.
Yep. 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 What do you think about the industry as a whole? I mean, regulation. We talk about rent control in certain markets. Probably there's markets I doubt there's gonna come rent control. But what do you see overall? I mean, in terms of regulation and some things that are happening already.
Yeah, I mean, it's something we recently had a event with Ken McElroy, who's a well-known multifamily syndicator, and he brought up rent control quite a bit. And if you look at rent control right now, it's primarily West Coast and Northeast. It really is not in the Southeast at all. And it's not that it couldn't happen; it could happen, but what happens is rent control makes the problem worse, right? And how it actually gets worse is there's a lot. If you look at, economists on the right and left, they'll both say, yeah, rent control makes supply worse. It makes prices go up. It makes even housing shortage even worse. So, but for some reason, all these politicians love doing it. And so, but I think regulations. I mean, the biggest thing that we look for, I think in general, is just the place where there is no rent control, where you have the ability as a landlord to if a tenant doesn't pay, you can actually evict them. Now in Los Angeles, I don't know if you knew this, but they just passed something that said we're extending the eviction moratorium until something like June of 2023. So City of Los Angeles, June of 2023. So that basically means that for 2.5 years, you can be in your house not paying, and the landlord can't do anything. And there's really not much relief for the landlord,
For
right?
the landlord, yeah.
It's crazy.
It's
crazy.
insane.
So,
it's insane.
it's not a sustainable solution. So I think a lot of these politicians maybe have never had a business. I think everybody, it would be helpful to learn about how investing works and have a business or whatever. But a lot of them haven't had a business or a job that kind of relates to that. They just want to have everything's given to them. So, but I think, in general, where you have business rights, you have, it's landlord friendly. It tends to be more red states typically that we buy in. We don't really buy in blue states just because it gets harder. It's harder to do what you want with your property. I mean, if you own a property in LA and somebody stops paying rent, you can't really do anything versus, I think it's Alabama, something like 3 days or 7 days, you can get somebody out that's non-paying, which is kind of crazy. I almost think that's too short, but, obviously you want to work with anybody you can, but the ability to have, the ability to do what you want with your property. And I think that's valuable.
Yeah. No, and every time I hear rent control or government control, when they interfere on the supply and demand, it comes to my mind two things: speculation and black markets. Right. That's really what happens.
Yeah, it is.
And it just never works. Never works.
Yeah. Thomas Sowell does a lot of writing on this. There's a book. It's called like A Citizen's Guide to Basic Economics, and it's a little, I'd say it takes a little bit of work to read it, but he just gets into all this stuff. Why rent control doesn't work. Why in New York, a study they did that of these 3 or 4 bedroom places in New York, they were, majority of them were occupied by one person, or there was a high amount, it was something like 30,000 units that were 3 or 4 bedroom that were only occupied by one person because they couldn't move, right? It was more expensive for somebody as a single person to move into a 1 bedroom than it was to live in the 3 or 4 bedroom. So again, you have so you think of all these empty spaces that aren't getting used, it creates a lot of inefficiencies. And that's just one example, but he gives a bunch of examples about why that doesn't work.
How do you see the short-term future on the industry? What are the opportunities that you see coming up for 2022?
For multifamily or just in general?
For multifamily.
Yeah. Well, so for me, again, we had this event recently, the 2022 Multifamily Outlook. You can find it on YouTube. We had Ken McElroy, Michael Blanc, and Rod Khalif. And I'm not smarter than any of these guys. These guys are great, but there was a consensus. Obviously, we're all multifamily guys. We all do deals. We're all trying to do more stuff, but we're also trying to figure out how do we be defensive investors, right? So we don't lose money. And Warren Buffett had this saying. He says, rule number 1 of investing is don't lose money. And rule number 2 is don't forget about rule number 1. So if whatever you do, you can just not lose money. You're in good shape. So we do see potential for interest rates to rise. I think it may be more slowly. Just at least at the time of this recording, the numbers came out were above 7.5%. annual inflation, the highest in 40 years.
Yeah.
There is pressure to raise rates. If rates come up, what does that do to the value of assets? I personally think that typically, as rates rise, what could happen is they do it over time, you'll have rents will continue to rise as well. And the reason I think that will happen is because they've printed all this money
Yep.
and it translates to a higher ownership cost. Now, if they raise rates too fast and they go to like 15% right away, then that could kind of shake things up a lot in a lot of different areas and a lot of, but I think that if they do end up raising rates, which is an if, we don't know if, but if and when, it could slow things down. But I think being in working class apartments really is the best place to be. And if you have long-term debt, a lot of these deals we have long-term debt on, so maybe they're 10-year fixed debt, or maybe it's 3 years with a couple extensions built in, which we're doing some of that as well. I think you're going to be just fine. So I think it's just really, I think things like flipping or other things is a little more risky because you just
Yeah.
don't know what the market's going to look like in 12 months. But
Correct.
if you have more of a 3 to 5, 6 year timeline, I think you're going to be fine.
Yeah, no, I agree. In the single family, I do see it's a little more risky, like you said, right? Because if interest rates go up a little bit, we might see corrections in very highly appreciated markets, especially
Right.
For the last year. I mean, only in Vegas, I think it's 22% the appreciation on single families over the last year. So it's
Wow.
yeah.
That's a lot.
But there's also the supply and demand issue. I mean, it's not only there's just not enough supply of homes, and there's a lot of demand. That's what we see on
Yeah.
the single. Because I'm in the multifamily space, but I also have still some interest on the single families. But yeah, that's how do you see what's the big next step for Bronson Equity? I mean, what's the big goal for this year?
Yeah, I mean, I think really, our company exists to help people that are busy professionals, business owners, or retirees to develop passive income. So I just want to bring that message to more and more people. The more people we can get out of Wall Street and get into Main Street, I think they're going to be much better off because I'm not convinced the stock market is the solution. I think that we could see some pretty big volatility coming up. Again, paper assets versus real assets. You have a lot of counterparty risk. And what that means is, let's say you have a stock, but a company fails, or maybe somebody who's involved with that company fails. It can really affect the actual value of the ownership, or they could dilute it. They could say we have to create more shares if the things go down. So there's risk around that stuff. So I think really educating people around how to select operators that do deals that are really good people, that you can have a long-term relationship with. And a lot of people, I found that we don't know what we don't know. So there are ways to kind of learn it. You can learn it through going to meetups. You can learn it through YouTube. You can learn it through going to conferences. There's a lot of great national conferences that I go to. And I just think really when we invest in our own education, we're going to be much better off. But I think right now things are changing so fast on the financial side and on the economic, the political, everything's changing so fast that it's really important that everybody pays attention and says, I want to get ready for what's coming. So whatever your opinion is, it's important that you're spending time, minutes, hours, podcast, whatever those books, these things are that you're learning, because it's so important that you prepare for what's coming. Because I think in 5, 10 years, it's going to look very, very different than it does now. I think we're due for some sort of recession. And
agree.
what that looks like, we'll wait
We
and
don't
see.
know.
But I have some opinions. I'm sure you have some opinions, and hopefully our listeners have some opinions too.
Yeah, no, I agree. I think that self-learning is so important, right? Because we continue to learn every day. I mean, we have to, and that's what I love about podcasts with an interviewing people like you is that I don't know. I mean, it's so rewarding when I talk to people like that because the learning and whatever, it's so much that I learned from you and from the people that I interview that is just rewarding. And I always learn something in every podcast, to be honest. Any mentor in a specific or somebody that was critical on your road to success, on this quest of unlocking wealth for you?
Yeah, I think people look at mentors like you have to do a paid mentorship. Some people spend 10 to 30,000, 40,000, 50,000 a year to be mentored by somebody. And I think, if you're high net worth and you want to do it and it will help kick your butt to get you there, may get you there faster, I think you should totally do it. I didn't really do that as much. I just kind of went and started trying to ask the right questions of people that I found that were really successful. So if you think of it like, who who in your life are you getting value from, right? A lot of people that have mentorship programs or do different things or they have podcasts, I mean, they're great people. A lot of great people. But, they have a lot of people coming to them saying, "Hey, I want you to mentor me. I want you to do this for me," whatever. What I think is really important is if you can kind of flip it around its head a little bit and say, "Well, how can I understand this person, understand their business, understand their challenges, and then see if you can try to be a solution to them?" Because if you do that, you're gonna learn a ton, and you may even get paid to do it, which is kind of what I did. I was able to 10x my net worth in a couple of years from basically going to somebody that was really successful and saying, "Hey, how are you working on this problem of raising money?" So I mentioned I raised 100K for a deal. Well, within 6 months, I had found another partnership, and about 18 months after that, I raised $15 million working with this new partner, and it all came from really, making yourself valuable to valuable people. And that's
Hmm.
a paraphrase from a Jim Rohn quote, right? It's just trying to find a way to create value to someone who is valuable, who's successful, who's doing big things you admire. So again, it's kind of more like not just I need to learn this, whatever. So no, I need to try to find ways to add value to people that I admire and respect. And through that, I got a great mentorship. I learned a lot, so, but there's been a number of them. My partner on the meetup has been great over the years. Her name's Christina. I've had, my cousin, as I mentioned, who's been helpful whenever I have a deal. I'm going through stuff. I read a lot of books. There are great mentors there. I listen to podcasts
Yeah,
like this one and educate myself. There's stuff on YouTube. There's all kinds of information out there. So
out
people
there.
think of you either have to have a paid mentor or a formal mentor, but you may be mentored on this particular thing by this person and then something different over here from this person, and that's all great. So I think
Yeah.
just being open to learning wherever it comes and being available to not just get but like actually giving, and in the process of that I think it can actually open up more doors than you just saying, "Hey, you give to me."
Yep. Yep. How do you choose, or what are the things that you take into consideration when you're looking to partner with someone? Because you've mentioned your partners, actually they're part of your success is your team around. So
Yeah.
how do you choose your partners? Because I hear people, and sometimes I have a struggle on choosing the right partner.
Yeah, yeah, that's a great question. It's challenging choosing partners, particularly partners you're going to work with for a while. I feel like you really don't know somebody until you do a deal together, right? You get to see their temperament, you get to see who can kind of weather the storms of stuff, or if they lose their crap when something goes not according to plan, and it happens,
Yeah. Yeah.
and so. I kind of, reputation is huge. So I listen to it's a small industry when you're kind of in and you go to different events and you can ask around, like you kind of get to know who's who and who's doing what. And I do pay attention to that stuff, but I think I look for people that, first of all, are people of integrity or people of character, people that, I know really are going to treat me well, treat my investors well. We say, well, how do you find that out? Well, you look at the actions, are they consistent? Does this person follow up when they say they're going to follow up? Do they have a good reputation? And then I'll do a background check on new partners. I'll just, do a background check just so that I feel good about it. I'm not missing something just glaring that's there, right? And a lot of people say, "Oh, yeah, I should do a background check," but there's a program or a website called goodhire.com, and it's like $50, $60, and they'll do a full background check on every person, and it's totally worth it. And if you
Yeah.
have investors or if you're putting your money in, it's just a great way to at least feel like you've checked a box that, okay, I didn't miss anything here. And sometimes things do come up, but it really depends what it is and how the person deals with it, right? So not everybody's perfect, you're not looking for perfection, but if somebody's guilty of fraud or something, you obviously don't want to work with that person, right? So
Yeah.
those are things that are available. But I think just in general, it comes down to values. So one of my partners now, it's just like, our core values are very similar. So it's really looking for someone who operates in a way that's very conservative, who, the numbers are not super flashy, but they're
Yeah.
solid. Somebody who's very transparent, particularly when things go wrong. Like that's a big deal for me. And I'm a passive investor beyond what I do actively. So that's important. And then also somebody who's really looking for long-term partnership. I don't want to be somebody who just works with an investor for one deal. And I want to have a long-term relationship with you. I want to get to know them and their family and be referred to friends. And I want them to have a great experience, both on the performance as well as the communication. Because you could have good performance, but have terrible communication, it's still not a good experience.
Yeah.
And of course, you could have good communication and poor performance, and that's just bad as well. So those are all things I consider, but it
Great
takes time.
tips.
Yeah, it
Yeah,
takes
no,
time.
great tips. But yeah, I think what is one of the most challenging parts is to find that right partner and the
Yeah.
right people in the team for sure. What do you do to keep yourself motivated every day, right? Because I love this quote that if there's days that you're not motivated, make sure that you're disciplined, right? So because we're
Right.
up and down, right? I mean, it's not like every day we have things that we deal with, whatever personal. How do you keep yourself top performance, motivation wise? I mean, something that you do spiritually, whatever the case is.
Yeah. Yeah, I do it through a couple things. One is through routine, so having routines that you do, and then also just really being very intentional about what I'm doing. So every year I go to a goals event. This last year I actually went off with myself, and I just basically created 8 or 10 big goals for this year, and I read them along with my personal mission statement, my values, and that stuff is like for years I just hear that I'm like, oh, how do you do whatever? Well, there's some great goals events out there that help you clarify that stuff. And as you read them, you keep yourself in front of it every day. It keeps you working towards a goal. And so, you're not going to kill it every day. You're not going to be like, oh, I've got to my goal way faster. But goals are just about steady progress towards a target. I'm watching even the stuff that I set a year or two ago. I've already achieved those goals. Not all of them, but most of them, right? So again, it's whatever we're looking at, that's where we're going. So I think that's a really big one. I do think as well, fitness is something that as you are active and if you have fitness goals, that actually can give you more energy. Brendan Bouchard has a book called High Performance Habits,
Yep.
talks about this principle that so for me, I do Spartan racing, which is like obstacle course racing. They're typically 3 to 13 miles. I work hard. I run hills, trying to train for that. I'm doing stuff I thought I could never do. But I think just having things like that, having success in that area, or even having progress in that area, I can bring that to my business as well. So it's amazing to me the link between personal development and fitness and these other goals and how they apply, and they can very positively impact your business also.
Yeah. Yep. No, I agree. It's so key to take care of our bodies as well. And I do think that when we're active and we have those fitness goals, we just create more energy around us. I don't know
Yeah.
if you feel that way, but
Yeah.
it's great. You've mentioned a few books. If you want to share a couple more
Sure.
for the listeners.
Yeah. So I'm a big reader. I think reading is just an incredible way to grow. So there's a really good book on negotiating. It's called Never Split the Difference
Mm.
by a guy named Chris Voss, and he was
Yep.
an FBI negotiator. And he brings these really practical, simple, topics of just how do you actually, communicate even with your spouse or in life, or when you're negotiating a deal, or you're talking to your kids, or all this stuff. It's really, really interesting, and just how to use empathy and other things to just be able to create a win-win. And so I think that's a really great book.
That's a
Another
great book.
book, yeah, it's a great book. Another
Yeah.
book that this is actually my favorite book of all time. It's a shorter book. It's called The Gifts of Imperfection, and it's
Hmm.
by a woman named Brené Brown. So it's what it really deals with. It deals with just again more the personal development side. How do you own your story? How do you get free from shame? How do you live a wholehearted life, living from gratitude rather than the expectations of what people want or trying to please people? So it really helped me a lot over the years. But yeah, those are a couple books I love.
Great, man. So we spoke briefly about inflation and government and regulation, all that. What do you think is going to happen with inflation? I mean, we spoke briefly about the possibility of rates going up, but what are your thoughts on the overall economy, not specifically on our on the multifamily space?
Yeah, I think right now, the economy's in transition. I think that there's the official rate is 7.5%. That only shows rent growing at 3.8% per year, but nationally is actually growing at 10 to 15%. So I think if you look at inflation overall, it's probably around 12 to 15%. It's high. And so, I think they're going to have to raise rates. I think they're going to have to try to find a way to slow things down as far as inflation. I think the only way you can do that is by continually ratcheting it up. I don't think it's going to happen right away, but I do think over time they're going to raise rates to a level where it's going to be noticeable and it's going to hurt, and we may have some asset prices, particularly the stock market or maybe single family, start to come down. And so, but you print all this money and you create it all, and there's no mechanism to put it back in the box, right? You can't put it back. So if you look at the history of the dollar over the last 90 years since the Fed, in 1913, the Fed was created, the dollar's lost 98% of its purchasing power. 98%. People say, oh yeah, hamburgers used to be 5 cents or gas used to be 5 cents. Well, it's not that everything's more expensive. It's just the dollar is getting less and less valuable. So Robert Kiyosaki says cash is trash. I think it's good to have some cash, but he's saying if you're just holding all this cash or you're holding bonds or stock, like you could get really hurt by holding all this stuff because of inflation.
Yeah. Biggest mistake that comes to your mind that you've done on your syndication deals?
Okay, and syndicate. I can talk about life. I got a few for my life.
Yeah, well, share those too.
Well, that's there's too many to count. But, I think one of the challenges. I wish I'd found this sooner. I mean, there's people that I see. There's a group, few guys I love named the Donis brothers. And these guys are, 19, 21, and 23 or so. Anyway, they're between 19 and 23, I think. And they're young, and they got it when they're young, and they're really going for it. And they're raising money, and they're doing deals, and they're all over media. And I think it's great.
That's
and
great.
I wish I was that young when I got it. But there is a saying, when the student is ready, the teacher appears, right?
Yeah.
So we get it when we get it, whatever age we're at. And I think just embracing that is really important. But I think, there can be this idea of convergence, that whatever somebody's business, whatever somebody's background, we get it when we get it, and we can apply the things that we have learned. So if somebody's an accountant, they can apply their numbers stuff they can learn to analyzing deals. If they've been in sales like me, they can use that to working with investors and trying to find great opportunities. If somebody, I know somebody that had a business where they ran a bunch of large golf courses, and now they're a multifamily operator, and they're doing awesome, right? So I think just being kind of kind to yourself in that process, where you're not feeling like you have to, you feel bad because you're not doing more, right? You just do what you can each day to get there.
It's timing, right? I mean, timing. Everything becomes timing, right? The right
Sure.
time of your life is when it happens, and that's when you got to do it. But yeah, no, I agree. Just to name a few, 2 or 3 top skills, or that you think are critical, not only on the business part but also on the mindset to achieve whatever you want to achieve, right? Whatever you call success, unlocking wealth in different ways, prosperity in general, that have worked for you.
Yeah. So I think what we were talking about earlier, the idea of being a learner. I know you're a reader as well, and just being somebody who continually learns. Brian Tracy has this quote that says, "If you want to earn more, you got to learn more." Right. So being willing to actually learn and do new things, and just the ability to reinvent yourself. I think I'm on my 3rd career now or something. Like, I've just done a lot of different things. I had a lot of different jobs, of course, from odd jobs as a kid and different things. So the ability to learn is what really allows you to take advantage of opportunities and see them when they're there. So I think one of the most valuable skills we can learn is about passive investing. Especially if you are an active investor, like a flipper or a realtor or something else. There's a way, as a flipper or as a realtor, you can pay 0 taxes, and you do it through depreciation, accelerated bonus depreciation through multifamily or other types of investments. I'm not giving anybody any specific advice, but I'm just saying there are opportunities that if you actually look, you can learn more stuff. So learning is a big one. I really think goals is another one, just creating goals. Like, where do you want to be in a year, 5 years, 10 years? And then, the other thing really is networking, going to events, meeting people. Because, you can be doing great by yourself, but you're never going to, it takes multiple people to get deals done. And if you have money, you're going to need somebody who operates a deal. And if you don't have money, you're going to want to try to put a deal or be a part of the operations of it. So I think just people underestimate the value of meeting new people, discovering what they're doing. You may learn something you never heard about before, right? And like, even in this conversation, we're talking about stuff that's like, oh, this is really interesting to talk about, and we'll learn about new stuff.
Yeah, no, I agree. The value that can bring the networking to your business, and even personally, right? Is amazing. Is sometimes people, I think, underestimate that. Now, if some of our listeners or investors want to, learn more about Bronson Equity, maybe some of the opportunities that you might have, should they just reach you on your social media, LinkedIn, Facebook, reach
Yeah.
you by email?
Yeah, so I'm on social media, particularly LinkedIn and Facebook. We also, we're doing deals consistently. We do look for investors, similar-minded investors to partner with, and so we're pretty active now doing new deals. I think we closed 1,000 doors in 2021.
Wow,
We're
that's great.
looking at a lot of new stuff right now. So I do have this guide that we put together. It's called the Single Best Investing Strategy During and After a Pandemic. It's 24 color pages of just different things that are going on, in the market, some of the advantages we gave about multifamily investing, some of those unfair advantages. You can check it out. That's at bronsonequity.com.
Perfect.
And that will kind of pop up. You can download that and then we can get in touch, or you can shoot me an email at bronsonequity.com. So
Perfect.
love to be in touch.
Yeah, no, we'll put on the video part also all your information there. So if listeners want to get in touch with you, and learn more about what Bronson Equity does, and download the book that you wrote, that probably we'll share that so they can do it. But Bronson, it's been a pleasure talking to you, learning about what you do. Amazing story. Thank you for participating in Unlocking Wealth and sharing some of your strategies and some of the things that you're doing just to help more people, make that step of faith, learn and, find the asset or the investment or the entrepreneurial activity they want to do so they can unlock wealth for themselves. But once again, thank you, man.
Hey, thanks so much, Dave. It's great being here. Really enjoyed it.
Thank you, man.